Hey everyone, welcome to Shunya 1, episode 141. How are you doing, Amit?
I'm doing great, man. I am really looking forward to this conversation we're about to have.
Yes. Today we are talking to Vasanth Kamath, the co-founder and CEO of Smallcase. And yeah, it was a really interesting chat. I think I've been wanting to talk to him for a while. I've used Smallcase as a product for some time now. Obviously, it's in one of the hottest spaces nowadays. I mean, while uh, I know on this show we've spoken to a lot of people in fintech. This is like one of those areas in fintech which is actually getting attention across the country, right? I mean,
Yeah,
the stock market is post-pandemic, especially stock market has gone berserk.
it's
You
doing
would
what it's
think.
doing, man. Yeah,
So yeah, this was a really interesting chat. I'm curious to sort of get into the how small case came to be, and of
yeah.
course all the things that go behind it. So really looking forward to it.
Cool. Let's jump right in then.
Vasant, how are you doing?
Hey Shiladitya, doing very well. Thanks so much for having me on this. Hey Amit,
Hey, good to meet you, man.
It's
same
been
here.
a while that actually I think I've been chasing you, saying that we should do this show, and I was actually surprised that you even knew about our show already. So
No,
that's
no, of course.
interesting.
I was just listening to Harsh's recording
Yeah,
just last week.
Mhm.
I think
yeah.
you
So
released that maybe a couple of weeks back, right? Yeah.
I
that's
think
right.
Harsh
That's
just
right.
came out on Friday, no?
So no, it was a couple of weeks back,
Was it?
and
Okay.
of course, I'm glad that you've heard of Shunya One, but we definitely have heard of Small Case, which is why I was really interested to have this chat. And of course, just as we do, setting some context for everyone listening in. Could you tell us a little bit about your personal backstory of how you actually came to form Small Case, and then of course we want to dig into exactly what the product is about and everything from there.
No, sounds good. So I'm from this coastal city called Mangalore. I was born there, but then I grew up in Abu Dhabi. That's where my dad used to work. So spent the first 15 years of my life there. He used to come back to India, specifically Mangalore, for my summer vacations. And I come from a family background that's been investing into the equity markets, specifically stocks, right? So my uncle used to run a sub-broking business. They also today run a hedge fund PMS business. Another of my uncles actually runs an investment advisory business. So being exposed to that side of personal finances pretty early on. Remember when we used to come back from my summer vacations, I used to help out my uncle sometimes, punch in orders, etc. So kind of
Oh wow.
being tuned to capital markets from a very early age, even me without me really recognizing it. But that was mostly childhood. Came back to India to do my 11th and 12th in Mangalore again. And then I went to IIT Kharagpur. This is where I did my both undergraduate as well as postgraduate, and also met my co-founders. So a little bit about both Anugrah and Rohan. Anugrah and me go back now more than 10 years. We were in the same hostel at KGP. We were part of the same department. So both of us majored in economics there. We were part of the organizing team of the cultural festival as there. So, we worked together for quite some
Oh,
time.
nice.
My other co-founder is my batchmate. He did his master's in computer science and engineering, but we knew each other through mutual friends again. So that's really where, we got to know each other, went our separate ways. So I joined a startup in Bangalore. I was the first employee there. We were looking to build, Bloomberg equivalent for private companies. Spent 2 years
Mhm.
there, worked on the team, worked on the product. My co-founders, Anugrah, went to Nomura. He was in Bombay. He used to build, you know, indices as well as structured products for HNIs and institutions across Southeast Asia.
Yeah.
Rohan went to Goldman. He was on the New York desk. He was building trading platforms for them. So kind of was exposed to the engineering side of the financial markets or the
Yeah.
capital markets.
Yeah.
And I think 2015 we got back together and started small case. So little bit of individual backgrounds there, but
Yeah.
yeah, I think.
And very very relevant, I would say very relevant backgrounds also, right? Thanks for introducing everyone, because it's interesting to see how all the initial paths you guys took, I would say, are pretty popular sort of paths, which most people take, engineering folks, or even like yourself, economics majors. Obviously you go to these large companies. You of course went to a startup, so maybe that initial exposure for you, you haven't had that big company exposure, but the other guys for sure saw the big bag, the situation, the big financial beasts that both these companies are.
Absolutely.
What was this common thing that you guys fixated on, saying that this is the problem we want to solve as a consumer product, right? Or was it again from the lens of, like, are you guys hardcore analysts of, hey, this is a addressable market, this is a gap, let's go here, let's go that? Or are you more like product builders, and what's the core, I would say, thesis for solving this consumer problem that you went after?
No, sure. It wasn't, very structured in the sense that we didn't take basically, landscape of what are the different businesses in this landscape, and then look at the market size, narrow down upon it. Actually, I think if we did that at that point, maybe from a addressable market perspective, what we're doing wouldn't make sense at that point. Obviously, things have changed today, but how we really came about it was each of us had our individual motivations or challenges that we faced, which came together in a very beautiful way. And I'm not just talking about the experiences that we had, but also what we really wanted to do or build out. So it started from what Anugrah used to do at Nomura, right? So like I mentioned, he used to build indices, he used to build structured products, and like some of the products that he built were very simple to understand, even though there's a lot of work going in actually constructing that product. But for example, say he was building a basket of stocks that would gain if, say, Japan looked at rebuilding nuclear reactors for its energy program. So that seemed very intuitive from someone who's looking to take exposure or invest in that product. But obviously there's a lot of work that goes behind it, and that's really where Anugrah started questioning, why doesn't this exist for the individual investor? Because most individual investors, like all of us on this call, we do invest into stocks, but we don't do it in a very structured manner. It's for most of it, as in for the vast majority. Obviously there are a set of people who are doing their own research, who know the kind of portfolio they want to build, but the rest of us are basically saying either someone else told us about this, be it a professional, be it a friend. Yes, or say
just buy Zomato.
Correct, and that's what we have seen how people are getting influenced by this whole new wave of social media and different content creators, influencers, etc. So it's still the practice, right, that people take exposure to stocks basis what someone is saying. It's borrowed conviction. So that was one. And second, we also felt the form factor itself of having individual stocks isn't maybe the best for someone who's starting out. We felt if mutual funds are a great vehicle for people to start, now when they come to stocks saying that we need to be more involved in the decision making or understand it better, is there a better gateway that we could provide? So that's where Anugrah came from, saying that that this hasn't been solved really. Why is this only limited to institutions or even high net worth investors? Why isn't this available to individual investors? Because it just makes a lot of sense intuitively. Today people say it's a no-brainer, it should have existed much before, etc. But that's where that came from. My motivation was really to do something on my own, as in I think my stint at the startup that I worked at, I saw through maybe more than 10,000 different companies over the 2 years. We used to work with VCs, we used to work with captives, so developed a very good understanding of business models, etc., in different spaces. So kind of the urge to become an operator was very strong, and obviously this space really appealed to me. I don't know if that's in the blood or whatever, but then that really appealed to me that way, and felt something needs to change. As in, we were seeing what's happening in the US. At that point, US was definitely a step ahead of what's happening in India, or maybe more steps ahead. Today, if you see the kind of innovation, we're neck to neck, or maybe India is even better in some of the financial innovations that are happening. So I think that's the other one that we've been investing in stocks as a society for more than 2 decades now, as
Yeah.
in
Yeah.
since NSE came in, it was mid 90s, etc. But still, the experience wasn't really the best, as in it was still, the black screens, numbers. Like, why does it have to be that way? If things need to expand or penetrate a lot more, you need better and simpler accessibility. So that was my, say, motivation really. Rohan's motivation, for example, came from building the kind of systems and scale that he saw in the US, and knowing that it'll actually happen in India. Can he be, a participant in that versus just
Yeah.
focusing on the US side? So different motivations from each of us, but together, I think, what we came with was that there could be much better investment products for individual investors. Can we basically enable, build that, develop that for our friends, our family, our network, and eventually a lot more Indians?
So,
And
sorry, you want to go? Go ahead, please.
no, and when you obviously it's been now 6 years since you started Small Case, and obviously you guys have evolved. We'll get into a little bit of the actual product itself. But when you started, what was I just want to know, for people who are non financial market experts here, or probably don't know a lot of the terms here, right?
Sure.
What existed? We all knew mutual funds, thanks to
Right.
a lot of marketing around mutual funds, and like you said, and those who knew stocks knew stocks.
Right.
I've heard the term. I mean, we've heard about ETFs. We've heard about so many other things. And a lot of this, well, like you said, was exclusive to people who could only access them. So for the
Right.
individual investor, there was actually nothing, right? Did you create this category, or was this what, did you have any financial market hurdles or red tape to sort of cross before you just made Small Case as an app and a tech product?
No, sure. So maybe I'll start off from what individual investors had as instruments or as options earlier, and it's what you said. Like, there are today multiple wrappers on top of stocks. Now you can go and buy stocks individually. That's what you do with a broker. You can go buy a mutual fund, which is a wrapper on top of multiple stocks that's managed by a fund manager. An ETF is similar. It's a type of mutual fund, but it's traded on the exchange versus not. A mutual fund is not traded on the exchange, whereas an ETF by definition is an exchange traded fund. You have PMSs, portfolio management services, you have AIFs or hedge funds, but all of them are essentially wrappers on top of stocks, right? So,
Right.
but for the individual investor, there were two ways. Either you go with a mutual fund. Honestly, the mutual fund penetration has really grown only in the last 5 years. As an industry or as a concept, it's been around for more than 3 decades. But over the last 5 years, the kind of scale and the assets or the number of investors or the participation has really exponentially increased, actually, or just in the last half a decade. On the stock side, I think if you look at the mid 90s, that's where things became electronic. Before that, it was the system on the floor,
Yeah.
where you have to call up a broker.
Yeah.
He's on the floor, yes, and all that happens. Mid 90s, National Stock Exchange came in, started making things electronic on the matchmaking side. So there was no concept of a physical floor anymore. It was an electronic floor where different brokers are punching in their orders on
Talking
an
to each
electronic
other.
system. Then
Yeah.
I think just before the 2000s started, I think somewhere around 97, 98, the regulator also said, why are stocks share certificates? Like earlier, you would get a share certificate, and the process of buying a stock, getting the broker to find a counterparty, you getting the share certificate was anywhere from a week to 3 months, and
Yeah.
depends on the entire thing, the settlement, the process, all of that. I think 97, 98, the regulator said, we don't need this to be physical share certificates. Can we dematerialize this? That's where demat accounts come
Demats.
from.
Yeah.
Now shares are just bits and bytes. You have it in your account, it's assigned to you, but then there's no physical share certificate being stored anywhere on your behalf. So these two things basically made the entire process electronic. So
Right.
2000s, we started seeing, an ICICI Direct, a share Khan, the first online trading platforms really come in. But what didn't really change was the behavior, in the sense the interfaces of brokers were still around single stock buying. Like, you had to select a stock, you had to buy it, you can track it, you can then invest more in it or exit it. So that's where 2010s, then say folks like Zerodha and Upstocks, the discount brokers, the digital first brokers built for, say, a Web 2.0, a mobile kind of an
Yeah.
era also came up. But still this behavior or the experience of buying a stock hadn't really changed. You would still have to discover a stock or search for it, buy it individually, track it, and then manage it. That's where we felt, as a concept, actually, what small case does today used to exist in other markets in the era of share certificates. Like, this was something that I got to know like 3-4 years back. Didn't know this when we started small case, but it was called staple securities. So basically, you go to a broker and you say you want to buy these 4 stocks. Instead of giving you 4 different share certificates, he would just collate the 4, staple it, and give it to you. So that's essentially what a small case is, right? It's a basket of stocks. So kind of that's where we felt that these two were very extreme options. Like, I give this analogy often, but then it just simplifies why these were two extreme options. Like, a mutual fund is where you give up all decision making control to a fund manager, and that's great. Like I said, it's a great way to start. You're getting exposure to equity markets, but you don't get the kind of transparency, visibility that you would get with stocks. So the analogy that I give is like, how has music consumption really changed? So like, earlier you used to have CDs. Now you might want to listen to, one song from the Bee Gees, but you'll have to buy a whole album CD to actually listen to that one song as well. You can't really change what goes into it. It's already predefined. The other extreme that came into music music consumption was you can either download or buy single songs, right? And build your library using that. That's similar to stocks. You again have to know which stocks to buy. How should your portfolio look? What's the fundamentals, who's the management, what their plans are, how's the industry faring, etc., before you choose to build your own portfolio. And today, if you see how music consumption is, it's a middle ground where there are playlists. They could be defined. You could create it. You could change what goes into a playlist. And this concept of an electronic wrapper versus a physical wrapper has actually made it simpler for a lot more use cases. Now you have playlists for going to sleep, going on a drive, for a rainy day, for while you're working, while you're studying, etc., which could never actually materialize in a form factor like CDs. As in, nobody is going to create so many CDs. There's obviously a whole supply chain, there's storage, etc., but playlists made that possible. So that's where small cases come from. Can there be a better middle ground between mutual funds and stocks, where you don't have to take on specific stock selection capability? At the same time, there's someone professional managing it. You get to partake in their expertise, their management. You hold it as a portfolio which diversifies the risk, and there could just be a lot more ideas, a wider range of use cases for you to invest in. So I know I went a little bit historically to that, but that's where small case fits in. So there was no precedent of this sort anywhere, in the sense that this concept wasn't as a concept. It was provided by a few brokers in India as well, model portfolios outside India as well, but nobody really looked to make this instrument in itself. So like, it was that, oh, you're buying stocks, maybe buy these 4 stocks together, versus saying, there is an entire concept or an offering around multiple baskets. They can be created by different entities, different individuals. You can transact it across any broker, etc. All of that required a new player to come in, and that's where that's what we've been doing over the last 5 years.
Interesting.
Brilliant. And there was no red tape or anything that was actually the second part of my question. Like, since the market is so regulated around what you can do or can't do, was there anything that limited anyone else before this, or were you able to crack something even on that side? Or did you just, like I said, or did you just make the tech happen and wire the pieces together?
No, so there is definitely a lot of regulations around what you can do, what you cannot do, right? From one, on the transaction side, I'm not going into the details, but just abstracting it. So on the transaction side, for example, you can only place orders on platforms that are approved by the exchange, which is based on guidelines that come from the regulator. But then you cannot place orders beyond that. On the other side, anybody who's giving research has to be licensed, right? So we've built it all along these regulations, in the sense that we have not tried to do a workaround or take a shortcut, anything. We've been very, very compliant right from the start. I think the difference in why it couldn't be done earlier versus why it's being done now is just because of how technology has made it a much more simpler problem to actually address, in the sense like maybe at some point, and it's not just about technology also, but then different participants and their adoption of technology that's also made it easier. Like for say, like I said, the transactions have to happen on an exchange approved trading platform. Today
Yeah.
we deploy exchange approved trading platforms with our partner brokers, and we have 12 broker partners. We have 12 different exchange approved platforms. So small case, that's not relevant from the customer workflow as much, because you're
Sure.
basically looking to place an order. But in order to comply with this, we need a central backend, we need multiple front ends. Each of them needs to be on the broker's domain in their environment, that has to be approved 12 different times by the exchange, etc. So that's
So
taken
you
a
had to
lot
go
from
through
us.
that. Yeah.
Correct, figuring out the entire workflow around which we'll actually comply with whatever is there. So
Got it.
as a concept it was simple, but then actually implementing it was a task. And I think
Yeah.
thankfully for us, we got the time as well as the bandwidth to actually focus on building it the way it should be. So no regrets on how we built it now. But at that point, as in there were obviously a lot of frustration around, why can't we do this faster, why does this have to exist, this doesn't make sense. It took us,
Perfect.
we launched in July 2016. We launched with our second partner broker in July 2018. So those 2 years were obviously tough. I honestly think it's still, too less. As in, when we started talking to other brokers, we felt it'll be a 4 or 5 year journey to actually going live with them. So 2 years is also great, but then obviously those 2 years were filled with a lot of understanding what really goes behind, facilitating a
No,
flow
no,
like this.
perfect. It's good to know that, right? Because again, probably not everyone knows what's behind. Now everyone knows small case as the one place I can go and just buy, like do what you said, borrowed conviction of others,
Right.
or theme-based investing, or all these sort of terms you guys have launched in this category. In fact, the word small case also, I don't know if even it existed as a concept, or did you
No, no,
guys
no.
sort of
It's
create
it's
it?
it's a brand that we've created ourselves. So
Yeah,
again,
now
on
others
that,
are using it.
true. No,
Yeah.
on that also, like I think we've been very strategic right from the get go, right? As in, we wanted small case to be a common noun versus a proper noun. So right from the
Yeah.
start, if you see, wherever small case is represented, it's with a lowercase s. It's
Yes.
not a capital S. It starts with, so that
Correct.
it's not just because small case is similar to lowercase, hence everything should be lowercase, but because we wanted it to be a common noun or a product
Yeah.
versus say a company or a platform, which is where right
Correct.
from the start it's been ingrained to say that we need to create a ecosystem around small cases versus saying small cases where you'll get all this.
Nice. Nice. Very nice.
Really interesting stuff you're talking about here, but I think that I think we might have jumped a little bit ahead from from an understanding perspective, right?
Sure.
So first, when somebody buys on small case, right, they're buying the individual stock. So basically, they're creating like a demat account with you, and then they are getting the stock. Did I understand that correctly?
Sure. So I'll maybe just break down the whole small case
Yeah, I
process
think
into
yeah.
what goes into it. So say like I defined, a small case is just basically nothing but a basket of stocks, right? And that basket of stocks is selected. The weightages, or how much you should buy, the proportions for each stock is decided by a registered professional. So let's say a SEBI registered research analyst who is actually creating the small case. For that, what we do is we actually have a SaaS platform. We call it the Small Case Publisher platform. Think of it as a Shopify equivalent for an investment manager. That's what we've built in over there. So
Hmm.
someone uses that backend platform, they get a front end. It's like they get a Shopify store. Similarly, they get a small case microsite where they can create and upload and manage their own small cases for any fee that they want.
Right.
That's one part of it, which is around the research, or the showcasing of a small case. The second part about it is transacting that small case, tracking it, managing it, etc., from the customer's perspective. That happens on the broking platforms that we have partnered with. So for example, on say an HDFC securities, there is an hdfcsec.com/small case, which is an exchange approved platforms for portfolio transactions. That's where you can transact this, because like I mentioned, by regulations, you have to transact it on an approved platform. You can then track it as a separate basket in your holdings. If there are any changes made by this manufacturer or the creator, that also comes to you as an update. You can then click one button and actually update your portfolio, and that's a transaction workflow. So
Okay.
these two are basically the glue between this is our platform, because on one end we are
Okay.
providing
Yeah.
the manufacturing interface, on the other end the transactions and the investing interface. So a
Interesting.
client needs to subscribe to a small case from a manufacturer. We have like 125 different small case managers today. They basically subscribe to one of those small cases, access the constraints. When they look for a transaction, that's where they need to have a brokerage account. What that means is a trading and a demat account with one of our broker partners. So we are
Okay.
not a broker here. You don't need to have a demat account with us, because we're not a brokerage firm ourselves, but
Yeah.
we've
You don't execute the
integrated
trade.
very deeply. Yes, we've integrated
Okay.
very deeply with these brokers. The top 12 brokers in India today, and more in the pipeline. But you need a trading account with them so that you can buy and sell these stocks on the exchange. You need a demat account with them so that you can hold these stocks through that broker. So that's where you
Uh,
need these two accounts. That's a brokerage account with one of these brokers, but that's the entire workflow of
and
subscribing and investing to a small case.
and I've even seen like when you actually, obviously, right, you buy through small case, and I use, let's say, Zerodha. So when I buy through small case, it then jumps to Zerodha, executes the transactions, and then comes back,
Right.
right? So which means, and I
Right.
get to see those stocks in Zerodha as if I had bought them directly,
Okay.
Absolutely.
almost,
That's
right?
the
Because
tight integration that we've done with the brokers backend.
correct. So it's as if I bought those stocks directly on Zerodha itself, but obviously I have a view of how they are tracking against the data I bought and all the analytics and everything around it on small case. So technically, I could actually trade them after that on Zerodha itself, and small case would, like, it, that whole thing would break. What, I never thought of that actually.
No, this is still an open point, as in some brokers have
Yeah.
addressed it differently. Some of our partners have addressed it differently. On Zerodha, for example, if you go to their holdings page, you will see a
Yeah.
filter which is set called kite. So that's where, if you select that, you'll only see stocks that you bought via Zerodha, not
Look
via
direct
small
them. Yeah.
case, so that you don't,
Yeah.
mess up the composition in the small case. With other
Yeah.
brokers, some of them don't even show the small case stocks in their holdings. They just say,
Yeah. Yeah.
stocks you bought, which is a la carte. They call it a la carte. Then you can see the small cases that you bought. And then to do anything, you go to the small cases interface, or then the mutual funds that you bought. So different handling on different brokers. But again, that's part of, building a platform that's across these different transaction players.
So I would think, and correct me if I'm wrong here, right? But one of the challenges that you all might have, right, and is that the minimum ticket size is probably higher than what it is for mutual funds and those kinds of things, right? Because I think with mutual funds, people are like, hey, invest $1,000 a month and start saving and all that. But over here, if
Right.
you have a bouquet of stocks that you are recommending I purchase, it will be in units of that. But one will have 3 stocks of this and 2 stocks of this, and so am I reading that correctly? And how do you address
No,
that? I mean, like,
absolutely, Amit. Absolutely. As in that's say an something that the small case construct today has to deal with, that there is a minimum investment amount per small case that changes in real time. So it's
right,
not, you're not buying a unit or a lot of a small case. Technically, you're basically buying the underlying stocks into your demat. You hold them as individual stocks. Only on the small cases interface, there's a virtual portfolio segregation so that you can
Yeah.
track it very easily, right? But
right,
because of this, this minimum investment value in a small case keeps changing in real time, and that's why the platform calculates that. But yes, if there's an MRF or an iShares stock in a small case, the minimum ticket size jumps up, to more than 20,000, etc., to even take exposure to that small case.
correct,
More recently, however, some of the small cases that are really becoming a lot more popular is the ETF based ones. So they don't have stocks in them, but then they have exchange traded products, exchange traded funds or ETFs as constituents. And these provide a lot of asset allocation strategies. So here, the minimum investment amount in many cases are even lesser than, say, 100 rupees. So you can
right.
invest in a small case which has 3 ETFs at a minimum investment value of like 80 rupees as well. So that's being countered by that. But I think, as a market, this happens globally, where there's the concept of fractional ownership or fractional shares. That does not
Right.
exist in India today. So at some point, it does make sense for India to also introduce this, because it will just lead to more inclusion into the equity markets, more participation, etc. But I
Yeah.
think it's an eventuality, and that's where the small cases concept will only
It's
get
a
strong.
I mean, conversation which I'm sure has you've had to tackle before, right? Because the moment you guys launched, and obviously small case has become popular and the whole theme based investing has become popular, the next obvious question is, can I buy a fraction of a stock? And create more like a amount based investing versus just stock unit based investing, which we are bound by today because of our Indian regulatory structure. So I'm sure you had to have that conversation before. And are you guys actually sort of working towards this? Do you as a side note, like, given that you guys are the interface, you're not the broker, you have
Right.
regulations to deal with, but you have probably lesser regulations to deal with than the actual brokerage firms of the country. Do you today? What made you sort of choose to disrupt this
So, if I could, and just like
industry?
to
Yeah.
kind of jump on your question, do you have actual lower regulations to deal with than brokerages do? You just
I
you
didn't get
said
your
that
question,
as
Amit. Sorry.
no, no. So
Yeah, I
Shiladitya
didn't.
mentioned as part of his question that you have
Right.
less regulation to deal with than brokers do. Is that true?
Right.
Do you
No,
think you
not
have less
really.
regulation?
Uh,
That's what I thought. Yeah,
no.
I thought that was your question was
So we
faulty.
don't. So we don't have a lot of the regulations that a broker needs to deal with in terms of risk, because it's their backend systems. But in terms of the
Yeah.
order placing, the kind of information you can show, what all you need to show, even if it doesn't make sense for the user, all of that is common. But to add
Oh.
to that, we have the other side of the manufacturing piece as well, which today there's no central platform that builds uh, kind of a regulated platform for advisors or for research analysts. So those regulations, honestly, like if you look at from the period of December 2019 to like September 2020, there were like at least five different consultation papers, guidelines, circulars that were launched, which actually changed the entire workflow there. So, the
Oh.
team, the product and engineering team that was working there, obviously, every 2 months something used to change, and that used to hamper the entire workflow. So we had to keep reworking those. But in that aspect, as a platform, more regulations than what each party has to do, because we work with multiple participants. So on the manufacturing side, on the transaction side, on the distribution side, so each of them has different regulations, which we all have to kind of work with, figure out, so that the entire workflow still remains as simple as possible.
Interesting. Sorry,
As on a
I picked up your question and just like destroyed it by
Yeah.
like picking a piece of it. But please go ahead and ask it
No,
again.
so it was actually going into, what the other things that you guys have built. So obviously from a consumer angle, you explained how awesome this is, right? Like,
That
uh, people suddenly now don't have to break their head about, which stock to pick and so on. So what are you actually, let's say, disrupting when it comes to businesses, right? You guys obviously also make, there's a revenue model, if you can talk a little bit about that. And what are you disrupting on the other end? Whose business are you breaking into, or are you creating something which is brand unaddressed market, like you said early on? Could you talk about that a bit?
no, sure. That's what I don't think we are really kind of replacing someone that way. So while disruption can either mean you're replacing someone and doing it much better, or you're basically exploring something that hasn't been done before. I think it's more of the latter in our case, because there's been a lot of infrastructure that has been built around the entire mutual funds transaction workflow, and that's an off exchange transaction, like I mentioned, that doesn't really happen on the exchange, because you're basically giving money to an asset manager, a mutual fund house. They collect that money, they pool it, and then the fund manager uses that money to
Yeah.
buy a set of stocks on the back end. They then create a unit, and that unit comes to you. A lot more hoops and loops over there, but then I just abstracted the core functionality of it. Whereas on the exchange traded product side, which is stocks, ETFs, real estate investment trusts, say now they're trying to figure out more liquidity for bonds on the exchange. I think nobody has really tried to play that role of trying to connect different market participants, and while still focusing on the investor. There are exchanges which are primarily the final settlement venues. There are brokers who provide access to these exchanges. There are research analysts or advisors or portfolio managers who create research or products around these exchange traded products. There are distributors who take, say, some of these products to their end clients, but there's no one common loop there, which is where you would have seen a broker trying to do something that is not really what's expected out of them or what their strength is. Like many brokers have their own advisory, they have their own research, they
Yeah.
have their own data. You see, say, data platforms trying to get into research because from their point of view, there's no connection. Everything operates in silos. So the customer comes to them for something, they think, we can build this, now we can start offering more things on the side. So there have been instances where something that has started off as a research platform becomes a broker because they don't have a way to connect to a broker. There's no
Yeah.
glue between them. So that's primarily what we've been trying to do. And hence, like, I'll just give you some maybe examples. So now, for example, say, Shiladitya, for a friend, who's great at stock picking, or identifying themes, has a lot of insights, can do research, and basically give you a product. If they had to productize this, right? So they would either have to be, a fund manager at a AMC, a mutual fund,
Right.
which takes its own time, maybe a decade, more than that, to actually rise through the ranks there. Or more recently, people have been starting their own PMS firms, right? Where, you become a portfolio manager, you start a portfolio management service firm. Today, the net worth requirement for that is 5 crores, after which you can maybe have a total addressable market of 3 lakh individuals in India. And there are
Yeah.
already 350 PMS providers who are targeting the 3 lakh market. What we've been able to do to that is basically say you need a license that requires lesser net worth. It's still from the same regulator. It allows you to do research. It allows you to provide advice. But you can come onto the small cases platform and start your investment management or your fund management business easily. You don't have to put in the fixed cost, the investments to seed this. You don't need compliance teams on day one. You don't need, say, sales teams. You don't need operations teams on day one. You can basically, if you have an idea, you can start your business, you can run it, and then you can grow it. And that's what we've been able to do on the manufacturing side. So we launched this platform just 2 years, 1 quarter back. So March 2019, this publisher platform. Today it has 125 managers. And it's exactly what, say, is happening in other parts of the industry. Like, we are taking it from a financial perspective, but then what Shopify has allowed people to do is basically start their store online.
Stores.
Substack has allowed people to monetize their writing. Like we've seen a lot of journalists move to Substack to say, why should I be bound to a salary? If I'm writing well, more people want to read it, I should be able to command that kind of economics. So similarly, this is what the publisher platform does for investment management or fund management. On the other side, say we have a product called the Gateway. This is similar to a payment gateway, but for broking transactions, right? So because we have integrated and formed a layer on top of these different broking platforms, we have again taken all those capabilities and put it into an API SDK layer. And now any platform which is not a broker can start offering stocks and ETFs by leveraging this infra that we built. So now we are basically seeing, this whole embedded finance thing is happening where every platform is now becoming a financial or investment product distributor, just because it either adds stickiness, it adds some monetization, it adds engagement to their own businesses. But we are seeing that happen very rapidly. Like, I don't know for both of you, but like, I don't know where you're, say, investing today, but it's not definitely a lot of people are not investing through platforms that were started for financial product distribution. Like today, say you have an Oppo, for example, starting a mutual fund distribution, starting a broking platform, a Xiaomi doing loan distribution. You have, say, WhatsApp
India
starting
Bulls
to do
doing.
India Bulls is still, more, they've started with the intent of
there was still finance.
But I'm talking about, say, say a Paytm from payments, now it has broking. You see now, say, and Google Pay now having gold on it. Eventually, they'll want to do other investment products as well. And Amazon Pay starting with this, they're looking at other offerings, MobiKwik. Every platform with a large enough user base is saying, I can just add financial products to this. So that's where
really
we're reducing.
Yes, go ahead, please.
No, so that's where we are reducing basically the overhead or the licensing or the compliance requirements for someone to offer stocks or ETFs, because now these are becoming products that every a lot of individuals are looking to have in their portfolio. And now you don't necessarily need to become a broker or a stock broker to actually offer this. You can basically embed APIs from the small case gateway or the broking gateway that we have. You can go live in a matter of 2 weeks versus having to become a broker yourself. And that's where we are working with a lot of use cases that we didn't anticipate at all. Like today, you go to a money control, you can actually transact a stock right from there. And that's what's happening in other industries, content or information meeting commerce. So instead of money control going out and starting their own broking firm and again adding, a layer to one more participant to the entire industry, it just makes sense for you to go on to money control. You're looking at a stock there, you're looking at a small case there, you want to transact from there itself. It's just seamless. You just log in with your broker, transact exactly like how we do a payment. Say, there are you couldn't buy ETFs from asset managers earlier. Again, now we are working with the top 10 AMCs to basically enable that flow directly from their apps and websites. We work with, say, a platform like Kuvera. They don't want to become a broker. Their strength is advisory and they want to advise across different asset classes, which is where they've integrated to the small case gateway so that they can open up stocks and ETFs there. So multiple such use cases from neobanks, banks without brokerage arms, loan distribution platforms, insurance distribution platforms. It just becomes much, much easier for them to offer products that they were not allowed to before just because of this neutral layer coming in between them and the transaction.
And you've built this plumbing basically. So a lot of this is also plumbing solving, right? You've solved a lot of the plumbing and you're able to offer it as a tech gateway product, as a API. It's brilliant, right? It's happening across the industry. So you're right. And you guys have obviously fortunately done it for these financial products. Similarly, just to mention, right, I also know that even Tickertape is a very popular product of yours. Obviously, it's become popular over some time now. And that is you guys also doing the same thing. You going into research and sort of offering that as an arm. Why go there? I'm curious to understand why you felt it was like a necessary extension of your tech portfolio of products.
No, absolutely. I don't think when we started it was necessary at all, but I'll tell you where it started from. So after we launched, a lot of people said, great, there are good catalog or menu of ideas that I can discover from, but I want to also be able to create my own small case and track it, because like I mentioned, if you were investing in a portfolio that you were creating, you would have to buy them individually, track them individually, which is where you go to, say, a portfolio tracking app spreadsheet, enter those trades again and track them separately. So when we launched that Create Flow, we thought maybe, an extension to this would be helping you find the right stocks to create your small case with. And that's where we launched something that we call the small case screener, which was, a comprehensive screener where you could put different filters, say, banking stocks that have grown by 20% in revenue over the last 5 years, and, have, say, stock price less than so much or stock price growth less than so much. So we built around, I think, 70 filters when we started that you could screen the entire stock universe on, and then you could create your small case. Over time, what we realized is people are not really using that for creating their own small cases. They're using that separately. They're saying, this is great. Can you give me more information about this stock? And that's been present, right? We have so many portals to give you information about stocks, but honestly, nobody had taken a very consumer product approach to building data and information around stocks. It was all either run by media outfits, or it was run by, say, brokers for whom it was a feature, not really the mainstay. So for us also at Small Case, it was a feature for creating a small case. So slowly we stopped focusing on building more enhancements there because it's not contributing to the core product. And that's where I think Feb 2019, early 2019 is when we found now our teammate, but we found one of our seniors from college who said that this could really be extended into a very separate ecosystem by itself. And we thought it had legs, and it still has merit to say that there's no data, information, and community platform around stocks. So can you build that out? It can't be as part of Small Case. It has to have a separate brand, because Small Case, like I said, we were really gung-ho on making it a common noun brand at that point. So we didn't want Small Case stocks to be this, etc. So we had to change the brand, relaunched it, I think, May, June 2019. So it's just been 2 years now, 2 years, 1 month since we launched it. And that's really grown as in full creds to obviously Ujjwal, who leads that. His team, he's got a
Yeah.
separate team behind it. But then that's where Tickertape started from, and the idea there is now it has a great information layer. People, like there are more, I think around 25 to 30 lakh people using it monthly to look at information about stocks. The next set of feedback or requests that we're getting on the product is, can I share my portfolio with someone else? Can I get feedback on my
Yeah.
portfolio? And it's not just a small case. They're saying, no, I've invested in the stock.
Yeah.
My
Everything.
thesis is this. So
Yeah.
can we build, social capabilities on top of that? So that's where, that product is also moving
So,
towards.
yeah.
But
It's
again, not related to small case at all. Idea while, it started as an extension, but over time it's become, it has
yeah. It's
started out
become a
its own journey.
full-fledged.
It's quite
Yeah.
independent. Yeah.
Yeah, independent business definitely, and the social network for finance is probably what you might want to call it. So interesting. Uh, this is awesome. So you guys obviously started with a core problem, went at it. It's become this ecosystem of tech products with a lot of obviously financial capabilities in each of them. Where do you go from here, Vasanth? I mean, obviously, small case has become pretty much I would say a common noun. What
Right.
is next on your horizon, and what does, I mean, I don't know, does the next 18 months or 2 years or whatever time horizon that you typically play in look like?
Right.
Because if you're a high growth unicorn company, I'm sure you guys you talk more in like 6 months. But what do you consider yourselves?
No, sure. I think that's what. So, like many of these opportunities just presented themselves organically, right? Say, we didn't think about this publisher platform on day one. We didn't think about this gateway API suite on day two, also. As in, these were things that really came up. As in, we got interest from a data platform saying, "Hey, can you enable us to do transactions because you integrate with the largest brokers?" So we said, "Makes sense. Can we figure out?" A product strategy for it so that it could actually also become a business line for us. Tickertape started off from a very different intent from what it is trying to solve today. So I think those things will continue to happen. So hopefully, luck and serendipity continue to play the same role that we've seen till now, and doing more things around the space, as long as it doesn't kind of impact what we're currently doing, it doesn't change our relationships that we've built over time, etc. I think those will keep presenting itself, and will be open to building more brands or more verticals or more such ecosystems along the way. But today, if I look at it, like I've told you what we're thinking about on Tickertape, but on small case specifically, I think there's two ways that we're looking to expand. One is both horizontally as well as vertically. One is, can we take the same platform to markets which haven't yet seen, the growth in retail participation that we are seeing today in India? Like I said, at the start, when we started out, there were maybe, I think, 25 lakh active Demat accounts in the market. Today, that's 2.5 crores. So grown like 10x over the last 5 years. But that's something that we didn't anticipate that it would grow really fast. As in, it's because of a lot of things that we've been able to kind of continue growing, and we're seeing this will become a part of everybody's lives. It's a
Yeah.
cultural shift that's happening where people are looking to have their portfolio into equities. Like when we started out, if you look at the entire individual wealth, more than 50% of it was actually into physical assets, not even into financial assets. And that's now
Yeah.
shifted to 60% being in financial assets, right? So, that's something that we didn't comprehend. But
No.
now that we've seen it play out here in India, we're sure that, this will replicate itself in every market eventually. And that's where one opportunity lies for us to expand horizontally to say, can we take this platform, its capabilities, replicate the entire stack in emerging markets? The other thing is,
Right.
more vertically, more depth focused. So today it's stocks, ETFs. Can we start including bonds? We have real estate investment trusts. Can we start including, say, hopefully when there's a policy around it, crypto? Can we start looking at global equities? Can we look at mutual funds as part of a small case? So again, a lot of ground to cover
Lot of
there.
things.
Whatever makes sense for the entire platform, we'll continue to do. But kind of broadening that, like financial planning use cases are not there on small case today. It's very stock ETF focused, but it's a great vehicle for
Right.
a financial planner to actually offer a small case to you and say that, hey, this will take care of your goals till this day. So can you
Yeah.
start building in those use cases, more products coming onto the exchange? So it'll help us. But these are the two ways we're thinking about expanding the small case platform.
Awesome. All right. Super. And Amit, you had a question.
No, I'm good. I have nothing. I'm set.
Okay. So wasn't I mean, there's obviously a lot more I could go into, but I think thank you for sort of sharing what the genesis and the future of where you're taking obviously the brand and the team. How is your, by the way, how big a team is it today? Like, is it for more finance people or more tech people? Simple
Definitely more
answer.
tech focused. So, like today, I think our team size just crossed 200 last month, but out of that, around 140 would be product and engineering.
Awesome.
Like a
So
good
it's
70%
very
is in
much a
product
tech,
and engineering. Okay. To
very much
finance,
a
I think the
tech
research or
company.
the products team would be 5 or 6 people. So not much on that side.
Oh
Wow.
wow.
Okay.
Okay.
That's
So it
pretty
comes
neat.
back to what you asked me in the start, as in, are you product builders or are you financial guys, etc.? We are through and through platform builders, product builders versus anything else.
Awesome.
Cool.
And where
I'll
do
just
people want to reach you in case like you they want to shout out to you after listening to this podcast? Do you want to like give us your Twitter handle or wherever else you are?
No, of course, quite active on Twitter and LinkedIn. So I'm on Twitter at Vasanth Kamath. You can just search me on LinkedIn as well. Uh, happy to hear from folks. As in, again, like I mentioned, a lot of our growth has been fueled by just getting random ideas and figuring out, a business workflow and a requirement to it. So I think that's the way that we will continue growing. So please write in with ideas, suggestions, feedback, anything.
awesome. I'll
Awesome.
just quickly request everybody to do a rating or review wherever you're listening to this. That would be very helpful. The other thing I'll just mention here at the end, if you enjoyed this conversation, Vasanth's co-founder Anugrah was on 4 episodes of Pesa Vesa over the last couple of years, and that's the show hosted by Anupam Gupta on the IVM Podcast Network. Do check that out if you want to know more about Smallcase.
Yep. Yes, as a network, we have been covering and talking about you guys for quite some time. So I'm really glad we could do this finally, Vasant. And I'm obviously that was a very leading question for asking, are you more a tech company? So I get to that's why we're doing this on the tech show at IBM.
Awesome.
So thank you so much for doing this. This was amazing. We will of course continue to see the journey of Smallcase and everything that you guys are building play out, and really looking forward to you changing the landscape of how consumers buy financial products. So this is awesome. Thank you so much for being with us.
Thanks so much, Sheila. Thanks, Amit. My
Thank
pleasure
you.
completely. Look forward to coming back again, when there's a lot more parts to the small
Absolutely.
case ecosystem. Today there's 2, 3, but hopefully next time we'll have more than that.
Awesome.
Absolutely. Thank you so much.
IVM.